Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending October 7th, 2022. Let's get into stocks. They were broadly higher last week with the S&P 500 up 1.5%. The Russell 2000 added 2.27. The NASDAQ was up 0.75%. Now overseas, the developed markets rose 1.94, which is the EFA index, while the emerging markets gained 2.52. In the U.S., energy and industrials were the best performing sectors, while real estate and utilities were the laggards. Now in fixed income, interest rates rose and bond values fell with the yield curve remaining inverted. Yields on the 10-year U.S. Treasuries rose 6 basis points to 3.89%, and those of the 2-year Treasuries remained higher at 4.3, up 8 basis points for the week. In commodities, OPEC announced that it would cut production quotas by 2 million barrels per day, equal to 2% of the global supply, driving the price of West Texas crude up 16.5% to $92.64 a barrel. Note that the cut is actually only about 1 million barrels from the recent production, since some countries have been unable to meet their goals. Economic data. The unemployment rate fell to 3.5% in September as the number of people on the payroll were higher than anticipated, with a gain of 263,000. The consensus estimate was 250,000. Manufacturing and construction employment continued to trend higher, although eclipsed by gains in leisure and hospitality, which remains below its pre-pandemic level by 1.1 million. And job vacancies, a measure of labor demand, stood at 10.05 million at the end of August, representing more than 1.1 million fewer listings than in July. Now, the largest drop was in healthcare and retail trade. The drop is a sign that the Federal Reserve's efforts to slow economic growth are starting to hit the labor market. And just saying what they're doing right now, raising 3/4, they're probably going to raise another 3/4, probably going to raise another percent. You are going to see the mortgage rates go into the 7s very soon. What are they doing? They didn't cut rates, or they didn't raise rates at all last year. What did they do? Inflation went through the roof. Transitory? It's not transitory. We're seeing the CPI numbers come through today higher than they were supposed to be, which means inflation is still at 8.1, 8.2%. So you're going to see our market summary next week is not good, because the market's getting nailed today and has been hit this week. So that goes back and forth every week, and everybody's like, my gosh, Joe, what do we do? What do we do? We got to sell it all. We got to move it all to cash. No, you don't have to move it all to cash. Do you know when to get back in? No. This is what the market does. This is why we're equally allocated. This is why we have the buffered indexes that we talk about, that if you are getting nervous, let's look at being able to still capture gains without having too much risk. There are things we can do. This is why we have annuities with income coming in. This is why we worry about making sure your income is provided for, because the market is going to go up and down. We're not always going to go up. We've had some really good years in the past. We got kind of spoiled. And now, guess what? This is what we have to deal with. So unfortunately, we have this. We will get through it. So let's stay the course. And yes, I'm going to help you with that. Let's get into some company news. Oil companies held in the gradient strategies, including Chevron, ConocoPhillips, ExxonMobil, Marathon Oil, Pioneer Natural Resources, rose 11.39 to 23.74% last week on news that OPEC is reducing their quota for oil production. How about CVS Health Corp, which is a G50 holding, fell 7.47% after the Centers for Medicare and Medicaid Services downgraded their rating from the CVS subsidiary. Aetna Medicare CVS expects that their downgrade to lower the Aetna National PPO membership in 2024 dramatically. Now, the company is evaluating operational incentives and share to repurchase programs to help to offset the projected earnings headwind. Let's get into Dexcom, which is a core-selected G33 holding, rose sharply after the Centers for Medicare and Medicaid Services issued a proposal related to continuous glucose monitoring devices such as those manufactured by Dexcom. Once approved, the coverage is anticipated to double the size of the market. Shares were up 26.82% for the week, which is awesome. Now, that includes this week's market update. Thank you so much for being part of the ARA family. To contact us, you know the number, 855-756-5700. Visit us at aradvisorsinc.com. Don't forget to visit our Facebook and YouTube pages. Get our newsletter, share it with friends. Anything we can do, let us know. We're here to calm you down. Remember, that's why we're here. We gotta take the emotion out of this, because I can't look at my portfolio without getting sick right now. And we don't want that to happen. That's why we have equal allocations, making sure everything's in good order. But we're here for you. Call us, let us know what we can do to help. And God bless you. We'll see you again next week.